Hey there traders, it's Jeff here coming at you from thestockbandit.com. Welcome back to another video trading lesson. Well, if you were at your screens today, it was hard to miss the action in many commodity stocks, particularly the metals and mining sector. They truly were the story stocks of the day, and they offer a great lesson which I didn't want to pass up. Fortunately, I did not have any positions in these stocks, so this was an observed lesson rather than one learned firsthand. And by the way, I've had plenty of those too. Today, this group started out without any unusual activity, but the selling pressure quickly arrived and never let up. Many of these closed at or near their session lows after seeing massive declines on big volume. What's so interesting is that this group has shown such leadership in spite of the broader market weakness in the past several weeks. It was one group where many traders found refuge from the overall market correction, allowing them to continue trading alongside as these uptrends just continued to persist. However, even in stocks showing relative strength, some method of taking profits must be employed. There's an ongoing debate regarding stop-loss orders and how much help they offer versus how much harm they cause. Well, today's lesson addresses that head-on, and it's pretty obvious which one wins out. So, as I mentioned, these stocks we're about to cover, they have shown a lot of strength in recent months. They've been in well-defined uptrends, and it's made it very easy to determine when the party is over. Well, today's action in these stocks suggests a big change of character, but let's take a look at some of the tactics which many traders could have used to prevent a lot of pain. The first one is the most obvious. It's the uptrend line. Uptrend lines not only provide support on dips within uptrends, but they also mark the pace of the advance. Today we saw a number of uptrend lines broken in the metals and mining group, such as Cleveland Cliffs. That uptrend line stood at 106 and the stock closed at 95 and change. US Steel had an uptrend line that was broken on Tuesday at the 177 level. So that's a considerable distance above today's closing level. CNX had an uptrend line which was broken at 106.50, more than $10 above today's closing level. Arch Coal had an uptrend line that was broken at 70 and a quarter. So that's more than $8 above today's closing level. Schnitzer had an uptrend line at 102.50, which is more than $7 above today's closing level. And finally, Fording Canadian Coal Trust had an uptrend line at 88.30, which was broken some $7.50 above today's closing level. Now, clearly, these longer-term trend lines offered not only a game plan for an exit, but much better exit levels than many traders settled for today. Now, another tactic which could have been used is the confirmation of a lower high. As uptrends start to falter, a last gasp move often occurs which is unable to attain previous levels, thus creating a lower high and a possible change of trend. PCX confirmed a lower high today after a parabolic run. Now, a recent dip was followed by a bounce which fell shy of the previous high, and that's been outlined here on the chart with a nice elliptical shape shading that lower high area. And then today's break of the previous day's low confirmed that lower high. This signal would have come at 147 and a quarter, more than $17 above today's close. And finally, another common exit strategy which traders of these stocks could have been using as some kind of a safety net or bailout level is the penetration of a short-term moving average. Even a simple 15-period moving average would have offered a nice exit plan for a lot of these stocks. And now 15-period is just a 3-week running average of where price has been closing each day. That could have offered a much better exit on these stocks than where traders ultimately settled for, and that would have definitely prevented a lot more pain for them, and they would not have taken near the beating that they did. So let's take a look at a few of these. Foundation Coal had a moving average, a 15-period moving average, broken at 81.10, and that's $2.50 above today's closing level. James River Coal had a 15-period moving average that was broken at 54.76. And that's over $9 higher than where today the stock finished. And this one also had a lower high, which was confirmed with today. So that was a stock that offered a couple of these overlapping conditions. And then finally, Massey Energy Company, MEE, had a 15-period moving average which was broken at 87.33, and that's over $12.50 above today's closing level. So today's trading lesson is very obvious. Even if you're trading stocks which have established nice uptrends and they've got plenty of relative strength, remember that the party could always end unannounced. Keep some kind of a safety net in place as a loss-cutting measure, whether trend lines, monitoring lower highs, or even a simple moving average penetration. When the signal arrives to jump ship, don't even think twice, just bail out. You'll probably prevent a lot of additional pain. That's it for today. Trade well out there, and I'll see you soon.